Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Monday morning pre-market webcast. Okay, new week, new month. Let's start off on the daily chart, and I've drawn a couple of lines there between the 2135 area and 2168. 68 is the area of last month's monthly pivot, and 35 basically bisects this 32 to 37 support zone that we've had. And it's what it's turned into effectively is a trading range. If you stretch out the highs, if you make that 68 to 72, then you've basically got a 35, 37 handle range that the market has been trading in for the last 7 sessions or so. Whoever is going to get the advantage going into October is going to have to break above or below that range. If the bulls are able to do it, then we certainly should see a move up to test the all-time high on the continuation chart, which would be 91.5, would basically be just a test of the yellow line up above there, the upper Bollinger Band, which is coming in right now at about 2190. If the bears break all the way below 35, then what they're going to want to do is test the September lows. What is probably more likely is they get a violent test of the lower Bollinger Band, create a higher low, and then go back up to the 20-day simple moving average to test that. Now, why do I say that? Because the bears are the bears and the bulls are the bulls. And absent fuel, geopolitical fuel, central bank fuel, news, something of that nature, this market will continue to want to buy dips. The bears need a news push. They need a push that's going to scare people out and keep them out. Okay, something along the lines of Deutsche Bank seems to want to do that, but very similar to what we've seen in these situations before. Deutsche Bank was down, and then Friday, it's up 15% on a rumor. So you've got to keep an eye on those banks. You've got to keep an eye on how price is reacting to that news. If if there's bad news there that is sustainable, then the bears may get their wish. But if they just float rumors, then those rumors are going to turn into dip buys, and the rallies off of that are going to be pretty violent. However it shakes out, what you're going to see for October is a lot of volatility, which for traders like me is fantastic. So I'm expecting a pretty volatile month, and not so volatile that it can't be traded either. It should, I'm really looking for that sweet spot of volatility here in October. All right, let's get on an hourly chart. Okay, so you've got the new weekly pivot coming in at 54. You got the new monthly pivot coming in at 47.80. You can see the September monthly pivot up here in the 67s. Resistance, resistance, resistance. This is the top half of that range that I delineated on the daily chart, and it's what the bulls need to take out to head higher. Here's your support zone down below. Tested, tested. We came back. We came back. We draw unnecessary ovals on the chart. This area holds, probably on the first test. In order for the bears to get anywhere, they have to break this. So I'm fully expecting a test of these pivots, both of them, early in the week. And it's how those pivots hold or don't hold that is going to spell, it's going to lay out the second move, which is either going to be a bounce probably up above 68 or a move back into the support zone. If the support zone breaks as well, then I would imagine it by then we've seen some news and the downside, at least for a couple of days may be on. But, I still think the best course of action with your account is, you need to be taking profits on the downside, rolling down stops, capturing as much as you can, because you never know what's going to turn it to head it back higher. So in volatility markets, we trade in thirds. We take a couple handles, we get our stop to even. We try to take big chunks on the middle, big chunks on the runner. But one of my focuses this month is going to be really vigilant in rolling up stops on those runners to capture as much as we can. So I would suggest that you do that as well. All right, everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Come check out the website, princetontrader.com. Come check out the chat room. We're always trying to get better in the chat room, and one of the things that we've done is we've altered the way in which we uh, talk about setup entries. And I think through that, we've been able to establish even more clarity than we had before, and it's getting a lot of rave reviews. So come check it out. I'll be back tomorrow morning with another webcast. Trade them well.